Good morning to all of you being here and to all of you listening in to this Alimak Group's fourth quarter and full year 2016 presentation, and also an investor update at the end here. Order increase up 2%, so 2% growth on orders, taking the order level up to well about 2.1 billion Swedish crowns. Revenues increased to slightly above 2 billion Swedish crowns, an increase of 1%, while the operating profit or the adjusted EBIT ended up at 330 million. And here we had an impact from the lower revenues coming out of the industrial side. Still, I would say a good number, where the EBIT margin ended up for the full year at 16.1%. So all in all, numbers that I am still proud of being able to deliver, and I know that my team and employees are also well satisfied with these numbers. Aftermarket, we know that what this can represent. We've seen that demonstrated quarter after quarter, year after year within Alimak. I think it's a very strong story. We know roughly what it means when we are selling a product on the industrial side, and what that also represents in future revenue stream. New companies that we have acquired is not in that same position today, but of course we are looking into the opportunities, the potential of course applying the same business model also to these newly acquired companies. Starting with Synergies, we expect Synergies to be at some 2 percentage points on the EBITA margin, and we expect that to come in with full effect in 2019. Where are these synergies coming from? First of all, we see clear synergies coming out of procurement, but also manufacturing optimization. When I say manufacturing optimization, it does not mean that we plan to close any factories. But we see that there is components being produced by one company that is in need in one of the other companies. We do have our own growth initiatives. Quite a few of you would have heard about this before. On the construction side, we continue to strengthen our footprint. On the industrial side, also here, we adapt to the needs that we see are present in the emerging markets. And of course, also the fact that we are expanding our footprint with salespeople is also adding to the opportunities. After sales, already touched upon a number of times, it's 66,000 units that are sitting out there just waiting to be served, and it should be preferably served by us. So all in all, also here, also with the added number of people, strong, good opportunities going forward. We have ended up with target for revenue growth, and I say that. Our midterm target is to have an average annual organic revenue growth of at least 6%. EBITA margin, and we have changed from EBIT to EBITA. And why have we done that? We have done that so that we can, take out the effect of the amortizations that are related to these newly acquired companies. So it is easier for those who are following us to actually measure us. And that is why we have gone from EBIT to EBITA. And our midterm target for EBITA is to reach an operating margin of at least 15%. So those are the top line and result targets. Capital structure, net debt over EBITDA, that one is unchanged. We have a target of 2 times for that ratio. And when it comes to dividend policy, we also have unchanged target. Our aim is to distribute a dividend of approximately 50% of the net profit or net income for the group. So I think all in all, these are summarizing the group's financial targets that are valid as from today.
Writing, it seems like you will be more focused on profitability than growth. So the question is really, how does M&A play into your targets going forward? And then the second one on the margin target, it's the synergies you present. I don't think that will quite take up the margin to 15%, even if you do 17% in the old business, if I have calculated this quickly correct. So where is the rest to come from? Is it more after sales and better mix in Avanti and Facade, or is it something else? Those are my questions.
Okay, if I should start with the last one, I think if you start on the 12% where we are, adding the 2%, then we are getting to like a 14%. If you say that we have a target of at least 15, I would expect our business to continue to develop. I would expect a bigger portion of industrial to come back. So I would expect margin also to come from that to make up for the sort of missing 1% at least that you are addressing. So all in all, like a 2 percentage point from the synergies here. But of course we have plans that goes beyond that also in all the other business areas of Alimak. So I think I would leave that as an answer to your last questions. When it comes to the growth, and if your question is whether any potential M&As would be included here, it would not. So this is all about organic. Any M&A initiatives or results of M&A activities would be an addition. Thank you to all of those of you who took the time to listen, being here. I'm sure I will see you soon again. And thank you for coming, and have a good day. Thanks a lot.
Thank you.